Okay, and my screen, which here I'm going to click share screen. Okay, very good. All right, the screen I want to share is this 40 great stock market winners one. Click on it. No, should I make it bigger? Okay. I did. Okay, I did. And should we try and see how it looks? Click go live. Don't- I don't want to share the whole monitor though. I just want to share the, let's see here. How the heck can we do this, Owen? Okay, sounds good. Now, if I want to enlarge this, how do I enlarge these? Click the slide over on the left, I assume. There you go. Got it. All righty. And then I just click on the next screen to get to that. Very good. Perfect. All right. We're starting right about now, aren't we? Let's do her up proud. Thanks for your help, sir, as always. And this is for VIPs only, correct? Everybody. Then let's go big. Thanks, buddy. Good morning, everybody. This is Pat Walker, Mission Winners. We're getting the last things screwed down tight. And we're starting here pretty much on time. I appreciate all of you coming in here. And I have a philosophy in life. You know, they say don't steal things you can steal. One of the things I don't want to steal, I don't want to steal your time. I don't want to waste your time. What I'm going to share with you today is something, a booklet that I got from O'Neill and Company. They sent it to me decades ago. I mean, decades ago. It has been and has been my go-to resource to find super stocks. I have taken this, I have screwed it down tight, and several of my screens use these constraints. By the way, my screens are from MarketSmith. I couldn't do this without MarketSmith. I'm not trying to sell you on MarketSmith, nothing like that. It's just, I used to get the Daily Graphs chart books. I've got chart books in here from the, believe it or not, like from the late 1980s, early 1990s. All right. They're great reference materials to go back and study. But what we're going to do today, because I'm not going to waste your time, I want to show you what to look for in the charts, both technically and fundamentally. It will really improve your life. That's what we're going to do. And let's see here. Let's take a look at something. Yeah, the market opens here in about 3 minutes. We're set there. These are the stocks we own. Some of them really have worked well. I mean, things like this can change your life. That's a move, folks. That's nice. Okay. And we keep looking for them. We're going to keep looking for them. Datadog's been a decent start, as you know. Cloudflare has been a good start. Clean and simple base and lifting off. But today, see, you can't catch me in a lie here. All these stocks I just showed you meet the constraints from 40 great stock market winners. All right. By the way, I'm not going to show you 40 charts. Don't worry. But I'm going to show you a few. But more importantly, what I want to share with you today is not just the chart formations, but the fundamental data. That's what sets us apart. We don't just look at good charts. We want companies, and it's a fact, and you're going to see it in this research from O'Neill and Company, leading stocks and leading groups. I say it a lot, but it works. It works great.
Hey,
So that's
Pat,
what we're
how you
doing.
doing this
40
morning?
great stock market winners. It's, well, I'll just tell you this. You see the cover? Mine is pretty worn out. I've taken that thing to IBD meetups for years. I still look at it. I was looking at it this weekend in preparation for our talk, but it just crystallizes everything for us. And to be quite honest, I kind of like that. So that's what we're looking at. Oh, and any input or anything from you, good buddy?
Yeah, I just wanted to let you know that you're currently showing the 40 great stock market wizards, but you're not showing your charts. So if you want to just slide that Ensign window in there or whatever you're going to do, I assume you want to show some charts before you get to this.
Well, yes. So how do I switch to the instant charts?
You'd have to unshare and share your screen. Share the different screen, the different monitor.
Okay. I'm not very well versed on that, Owen. Oh, we're open. Okay, Owen Larson. Hang on a second. How would we do that, Owen? You want to log in? You're more than welcome to, brother.
Alrighty.
I'm watching the charts, by the way. By the way, team, what you're hearing are limit alerts. We sold some MU. Okay. This is a classic case. Well, I'm going to wait till we share it here. Hold on.
Hey, Pat, how are you doing? So, with this screen, you could just move Ensign over to that whatever screen is 40 great stock market winners.
Okay. Tell me this. Do you see it
Yep,
now?
right there. That's it. That's all you have to do.
We'll slide it in and out. You're a gentleman. Thank you for you both for your help. We'll take it from here. Okay, team, right now, you can see, in fact, we're going to do something here. You see Ensign?
No, I can only see it on your on the monitor that it was on a second ago. That's
Okay, so I
fine.
can't shift to the center monitor. Okay, my apologies. We'll go back.
Yeah, you have to leave. Yeah, whatever's in the monitor that you're on right now is what you're sharing.
Okay, good deal. Thank you both. I appreciate it. Right, team. Micron's pulled back here a little bit. As you can see, and this is very useful, to color code your tickers. NVO is pulling back a little bit. We've sold some. Here's a very important foundation I want to share with all of you. Never let a good profit turn into a loss. This is exactly why we sell some into strength. It really does help us, team. DraftKings is down here to the ADMA. We watch it. And also, team, this will help you prioritize things. We're not really looking to buy stuff right now because the market's a little soft at the open. But what we do want to do is watch what we own. Okay, Microsoft is still good. In fact, that's great. Okay, Micron is gapped down here a little bit, as you can see. And notice we've had some sells into strength, right? That helps us a lot. And we're going to watch this. If this keeps down ticking, we're going to lock in more profits. It's that simple, and it really works. coin lifted, but I double checked and people didn't own it. That's why I put not owned on it. So that's why it's not on the front page. I strive to be very organized here. Stocks we own, stocks we're interested in. That's simple. The beautiful part, you don't have to do that because you're just managing your accounts, which is great, your personal accounts. Which leads to a very important point too. Run your race, focus on what you've got, not what other people have. Learn from things, but build from there. BAH gap down. SMCI needs to pull up a little bit more. Nothing to do with it. PGTI's pulled back a little bit. Watch this and see what happens. Dash looks good. Micron, here's a good lesson. Look what Micron did here, team. It came down right to the 21-day moving average. That's the blue line, the 21-day exponential, and it bounced right off of it. This is a crucial lesson for everybody. Everybody knows about the 200-day, the 50-day. Most people use the 20-day simple. We use the 21-day exponential. Many people use the 21-day exponential. Comes right down to it and bounces off of it. People know about it. They supported it there. Okay, I'm not saying buy more, but I'm just saying people know these moving averages and they use them and base their decisions, some of their decision making off of it. We do the same thing, and that helps us a lot. For what it's worth, GLD is lifting a little bit. It gapped up. I'd be careful with that. Amazon. A little bit below this pivot line here. If this keeps dropping, buys down here, but it's still above the rising 8 EMA. We'll watch this and see what happens. By the way, team, I want you to know, you can say, Pat, you sound rather casual about it. Yeah, it's important. This is what you don't want to hear. Okay, team, I got to tell you, this Amazon's dropped down below this top line here. We've got to make sure it doesn't lose the 80. No, you don't want to be around things like that. Okay, it's too much high emotions, and we don't want that. For your sake, for my sake, we don't do that. We just watch it, not being lazy and cavalier, but we'll watch this. We've got good gains. Let's see what happens at the 8 EMA. That's it. Price alerts are set. We'll watch. That will really help you, team. Mercado Libre looks good. So let's just go down the charts. QLD's basing. Datadog is still good. Meta lost a little bit. If it keeps dropping, we'll lock in more. LPG is good. I'll raise the alert a little bit. It's working. Just scanning them. This is what we do. Advanced Micro Devices needs to start to pick up. We're small to start. PGTI is pulling back, but on very low volume. That's okay. Adobe. Hanging in here. Support on the 8 EMA. Amazon's okay. ANET's okay. Crowd is support on the 8 EMA. The yellow line is the 8-period exponential. And you see what I put here? Earnings Tuesday. Earnings today. Okay? Please know that. In fact, we're going to do this. If you own DraftKings, I would lock in some profits. Okay? I would sell 25% and lock in some profits. And I'll post that for you. Do not, I'm asking you, please, do not carry a full position into earnings. That's reckless. You could be a hero or you could get hurt. I would sell off 25%. Good to lock in some profits on CrowdStrike, CRWD. And again, earnings today. And I will click submit. Here's the other thing I do for us. Minus 25%. This is my bookkeeping. There it is. And then I put an arrow on it. The arrow signifies that this is an investment trade from today. DraftKings is losing the ADMA. We've sold some into strength twice, so we're in good shape. By the way, team, these are not textbook lessons. These are real world lessons. These are lessons, these are tactics that I used, when I was living off investing profits and supporting a family of 6. Okay? This is what we were doing. It's good for us financially, but it's also good for us mentally. Mercado Libre looks good. Meta's hanging in. Microsoft's hanging in. Micron, Cloudflare's hanging in. What we'll raise that alert on Cloudflare just a little bit. Netflix has been a great trend. This is a crucial lesson for everybody listening. Many people, you all don't, but many people, and I was one of them, was the person who would buy this here and it would run up, go, that's pretty dang good. I'm up 20 points. I'm going to take the gain. Jeez, I can't beat that, man. Look at this. I'm selling that sucker right here. I got 20 points. Oh, that's great. And the stock's gone up another from 439 to we'll call it 479. It's gone up another 40 points. 40 points. And you didn't have to do anything. Learn from my mistakes from years ago. You can sell some, but let some work. You don't know where it's going to stop. But if you sell it all, you just put a cap on your potential for more profits. Team, that's a really valuable lesson that you can use. I encourage you to do that. Now, hanging in, NetEase. We'll raise that price alert a little bit. We want NetEase to stay above the rising 21-day. NVO gap down. And let's see here. I want to take that off because that was from yesterday. We'll watch this. I don't like that gap down. If this keeps going, we're going to sell some. We're not going to have any problems here, team. It's that simple. TNK, clean and simple base, lifts up, sold some, forming another base. Isn't that great? If this lifts through here and takes out these tops, guess what? We'll buy more. And it could not only be an add-on, it could be a new buy for people. You can say, why? Because it's a clean and simple flat base. That's what we like. Zscaler lost the 80-minute. I had this on the chart yesterday about earnings. We can take this off because that was from yesterday. And what did we do? Yeah, we were selling more. We sold some earlier and we sold some yesterday. Why? We knew earnings were coming yesterday after the close. And aren't you glad you sold some? Because look at the drop. Look at the gap down. You go, dang, nabbit, I should have sold some. We did. We sold some on the way up and we sold some yesterday. So we're fine. And I'm going to raise that lower alert. If this starts to take out the lows of the day, what's our plan? It's really quite simple. We'll lock in more profits. It's that simple. Toll Brothers, hanging in. I want to see this. It's got support here. If it starts to lose the ADMA, I will advise to lock in some profits. That's it. These are real-time, real-world lessons. This is actually doing it, team. Okay? Some of you are in the same position that I was. All right? Sole source of income was investing profits. That was it. Stay-at-home wife with 4 kids in private Christian schools at the same time. Had to make the money. And had to refine these skills, these tactics that I share with you. And it works. Accepting this fact also, team, please know this. I know that I'm not going to sell at the top. Okay, I gave up on that a long time ago. When people say, hey, I got the top, I'm like, That's just so immature. Just no bragging here. We don't want to do that. It's not good. We just get what we can and we're happy. Okay? That's all. It works. Let's take a look here. AER, these are keyless stocks, nothing. Amazon, this is a keyless stock. I want to see this start to power up here. Okay? Good buys down lower really help. Some sell help into strength. AOS has not triggered yet. So we leave it alone. NVO is dropping further. If you own NVO, I would lock in more profits. I would sell another 25%. Lock in more profits because it gapped down. And I will post that for you. I would sell 25% of what you own. And I'm submitting it. And team, please know this. That is a suggestion. I'm not commanding you to do something. There will be times, though, that I will be very blunt with this and say, hey, if you own this, sell this. All right? I'm very direct about it. And then I put a little arrow on it, again, signifying it's from today. Drop that a bit. QLD has been a great run, and we're letting it work. You hear that alert going off? That's the spiders going off. We'll drop it a bit, just to tell us what's going on. You can see there's some red there. Here's the IBD write-up page. Quite a bit of red there, isn't there? Okay. Here's the ETF page. Quite a bit of red. Here's the maxlist page. Quite a bit of red. What does that tell us? In literally 5 seconds, it says there's just not a lot of power at this point in time. That's fine. It just tells us at this time, be cautious. Don't buy, just be cautious. Buys down here on Amazon are great. Lost this, we sold some. Price alerts are set. There we go. And the reason, team, I talk so much, it's not because I love talking so much, although I do. It's your priority, and I'm just pouring my heart out to what would help people? What would help? And then I keep talking about these things. XME's picking up, but here's a good chart. But you can say, boy, Pat, it moved up a lot just to get to the pivot. I'll draw this for you to help you. We'll get rid of this line. These are real-time, real lines right here. Oops. Eyes right here. Going straight across, just a simple flat line. There it is. Now, let's look at this, team. This ran up big. It made a big move just to get to the pivot. What's the best thing it could do? Form a handle to absorb some of those gains. We'll watch and see what happens. There we go. Back to our page. AMD. Watching AMD. Want this to stay up there. That's important. And again, still quite a bit of red. Watch and see how it goes. And another very important lesson for everybody. People say, oh, but the Dow's up, Pat. The Dow's up. Please know this. The Dow is 30 stocks. Just 30. And not a lot of power there for it, okay? Just for what it's worth. We are going to get to the session that I want to cover also on 40 great stock market winners, but I knew, and Owen knew, and Rich knew We're not going to start that right away. We prioritize. We got to watch the stocks. That's what we do. So let's scroll down and see what we got. Adobe's okay. Amazon's hanging in. ANET's still good. CrowdStrike is still good. Game plan. Earnings Tuesday. Okay, that's today. Support here on the ADMA. This drops a hair more. We're going to sell more. Why? To guarantee profits. That's simple. We'll watch and see. But earnings today, know that. DoorDash is hanging in. Price alerts are set. Datadog's trending. DraftKings is trending. Pro is hanging in. They have earnings 11/29. What's today's date? 11/28. You see this? That's why, team, these are little tactics that'll really help. How many of you knew? I'm sure many of you did. This stock has earnings tomorrow. Did you know that? Well, we got to know it on the chart. Sure you do. Good job. Intel, clean and simple base. We're in great shape. Price alerts are set. Melly is great. Starts to drop. We'll lock in more profits. Meta has support on the ADMA. Needs to lift. Microsoft is still trending. I'll raise that lower alert a little bit. We'll watch and see what happens. Just an alert, not a stop. Z-scaler. Okay, that's reversed nicely. Good. Here's a good lesson for you, team. This had earnings, and it gapped down. When a stock's dropping, gapping down, or even gapping up, just wait a couple of minutes and see what it does. Now I'm going to just show you. I'm really going to drive home the point. This is Z-scaler. It gapped down. They had earnings yesterday. Take it down to the 10-minute chart, and you go, look at this bar. But I want you to look closely at it. Note where it opened, and then it fell, and note where it closed. It closed in the top third of its range on a pickup in volume. They supported it, and it's hanging in. That is a very good lesson. That's a 10-minute chart right there. I'll commit heresy and do it on the 5. Here's the 5-minute. Gaps down, drops, and look at where it closed in the top third or fourth of its range on volume. They supported it, team. And then look at this. You want to see something amazing? See this little pennant that formed? When it takes out the top of that pennant, look at the volume that came into it. These chart patterns are applicable on different time frames. Isn't that great? There we go. Coming back. Okay, let's look at AMD. Watch that and see what happens. Micron, if Micron loses the 21-day, we'll lock in more profits. It's that simple. Price alerts are set. We'll watch and see. What helped us? Sells into strength helped us. There you go. Amazon's dropping here. I'll just share this with you. And this is a good lesson, time lesson. There was a spot here to buy right there, okay? I don't know if anybody did, okay? By the way, when I ask, I'm not trying to be nosy and get in your business. It's just that I can set alerts accordingly to help you. Now, here's the good lesson. If you bought this here, not down here, above this top line, it's losing it. If you bought some up here, I would sell off a third of your shares, okay? And again, I'm being specific. If you bought some yesterday, it's fallen back below the line. Sell a little bit off. Protect yourself. How much? Sell a third. Sell 25 or 30%. Sell 33%. So I'm just going to, I'm going to post that for you, okay? To help you. One of the things we're really big on is controlling and minimizing risk. We'd sell 25% on Amazon, okay? Now, that's with the assumption that you own some down here too. okay? And this was more of an add-on. So, and I'm going to post this right here so we know. And then I put a little arrow on it signifying that that is a transaction from today. Okay, Micron is losing. We sold some, right? It's dropping here. If you own this, it's got support. It's losing the 21. That's the 21 EMA, the blue line. I would sell 25% of what you own. Lock in more profits. And I will post that for you. Lock in more profits. And this is what I do, as you know, with my bookkeeping. Put a little arrow on it. This really helps us, team. One of the best tactics we have, good buying. Right up there with it, good sells into strength. It really helps. AMD, there's just no power there. Don't like that. I'm just watching them, team. Amazon, we sold more. I'm going to circle back to this foundation, team. Just soak this in. Buy right out of clean and simple basis. Let it work. When it reaches points where it looks like it's pausing, sell 20, 25% of your shares. No day trading. We're not scalping. We're letting it work, but sell some. The elimination of the uptick rule changed the complexion of the markets. Oh, God, it's been dang near 20 years ago, okay? So this isn't like a recent event. So what do? You sell some and lock some in. It works. DraftKings. We sold some twice into DraftKings. Keeps dropping. We're going to sell more. Did you notice, by the way, we weren't doing a lot of buying yesterday? We've let our positions work, and we're managing them, and that really helps us. Okay, Micron, we've sold some. This is losing the 21-day. If this stays down here, we're going to sell the rest, okay? And if this ain't the classic case of why you sell some into strength, I don't know what is. Clean and simple base, some sells into strength, and thank heaven you did that. It's working. Price alert set keeps dropping. We sell more. That's simple. Now, we're in great shape with now. Here's the base. See the clean and simple base? Look at the volume pickup on that bar. And note the trend. It's like not quite 60 points. At one time, it was more than 60 points. That's good money. That's darn near 10% in 2.5 weeks. Closer to three, but it's working. Sells into strength help us. Price alerts are set. We'll watch it and see what happens. Here's another very important lesson for us right here. Trading lesson, investing tactic lesson. See how I can enlarge the charts? That's with a hotkey. You know they have the ability to do the same. Don't make the chart so small and tight you can't really see the nuances of what's going on. Spread it out enough so that you can see it. There you go. That is a great tactic. Another very important tactic for all of you. I've done a lot of research on this one, okay? A black background and then these colors provide really high contrast resolution to see the charts. If I change this to a pale gray background, you go, God, that wears my eyes out. I'm not telling you what to do, but there is a lot of research in this color scheme. A lot. I mean, a lot. And it'll help you. SMCI is not doing anything. I'm going to scan these little keyless stocks and see what's going on. AER is not doing anything. Amazon, we know about it. AOS is nothing here. BAH gap down. This tailed off yesterday. There's resistance there. And you can see how it closed yesterday on a pickup in volume. Ran up and closed near the lows. For right now, we're going to take BAH off the list. BAH off the key list. That's simple. Which does something also for us, team. It improves our focus on what remains. And I like that. AOS is hanging in. DHI lifted up. It's just slowly, steadily back. Not a lot of power there. I'm going to take the home builders, with this, I'm going to take DHI off the list for right now. Just not clean enough at this point in time. DHI comes off the list. And again, closed weak yesterday, and it's gapped down here a little bit. DHI off the list, which does something for us also. And you know this, you could teach this, because you're probably thinking to yourself, so it improves our focus on what remains. Yeah, you got it. Yep. I don't like the price action on PGTI. We're small to start, right? Add a small to it. Rules of proper pyramiding help us. It's down on low volume though, so we'll watch and see what happens. Roku is still working. And we're in good shape.
Hey, Pat.
Hey, good buddy.
Hey.
How you doing, man?
Rich just sent me a question here from JB. Quick question on Amazon.
Yeah.
If it's a new entry, would you fully exit?
Great. Good question. Thank you for asking. I appreciate that. Yes, if that was a new entry, the first entry, you hadn't bought it before, and it's dropped below the line, great analysis on your behalf, JD. Price is good above the line and bad below, I would sell those shares. Sell them. Keep losses very small. That's the perfect example of why we like clean and simple basis. Price is good above the line and bad below. Yeah, I would sell. It's a small loss. I mean, it's probably what? Just a hair over $1 on a $147.50 buy? And I'm not minimizing the loss, folks. I don't do that, okay? I don't sugarcoat it. But percentage-wise, what's 1 divided by 147? Well, I'll tell you this, it's a lot less than 1%. There you go. So I would do that. And I'll post, y'all are listening, so you know what to do there, okay? Now, if you own it down lower, you're still okay. But if your first buy was up here, taking out that top line, and you don't own it from lower, I would sell those shares. There you go. Thank you for asking. Good. I'm just looking here, team. There's a rocket ship. Scan these real quick. Adobe. I'm pointing this out again. Note the trend up the 8 EMA. Team, this is a true confession, and there's a guy in this room that's listening right now, and he's going, I know exactly what he's going to say, because we did this together for years, he's my brother from another mother out in California. The idea that years ago I'd have bought this, oh man, that's pretty good gain. I'm up here, dang, then 20 points, knocking on almost 30 points. I'm taking that gain. I take it and I miss another 30 points. Learn from my mistakes. I really mean that. Micron, we always have a plan, team. If Micron loses the lows of the day, as I've stated before, we're going to sell the rest and lock in profits. That simple. Cloudflare's nothing. Netflix is great. Now is great. NTES, the sells into strength help us. Price alerts are set. NVO. We'll watch this and see what happens. And again, team, this is the perfect example. Keeping losses very small. Let's suppose you bought this up here at, we'll say 103, okay? 7%, all right, is about 8 points. Well, we're not going to take this down from 103. I don't want to take it down here to 95, all right? I don't want to do that. We'll watch it and see. Team, this will really help you. A clean and simple entry gives you a clean and simple exit for a much smaller loss. That really works. Use that to your benefit. I can't stress that enough. Okay? That really helps. Roku is still good. I wouldn't, if you own Roku, I wouldn't add to it. Just let it work. Okay? Just pointing that out. Chasing price too much. It'd be a little too aggressive at this time. Volume's just okay. Pulte Homes, nothing there. SMCI, nothing there. Toll Brothers, nothing there. Wait. What I just did there, that is exactly what I do during the day when I'm scanning the charts. And this will also help you, team. Do not, I'm asking you, please don't do this all day. Okay, now I'm going to go back. Okay. Don't do that to yourself. I'm asking you, it will drive you crazy. It'll wear you out. I'm just encouraging you, please. You don't have to do that. If you have price alerts set, you can just kind of monitor them, okay? I'm not saying don't look at the charts, but you don't have to keep scrolling back and forth. Let the computer do some work for you. Let the computer be your eyes. Price alerts helps the computer be your eyes, another set of eyes. What I'm going to do right now, team, I'm going to switch shirts because I got a long sleeve shirt on. It's getting hot in here. I'll be right back. I got the air turned, or the heat turned down. And I'm back.
Hey, you want to take a look at a stack?
And look at what?
Let's take a look at a stack. I
What's-
got a question on
What's a stack?
Duo.
Okay, buddy, which would you like to look at?
Duo. Is my
PDD?
volume high enough?
Here we go. Thank you for asking. Team, I love your questions. And don't think, oh, Pat's busy. I can't ask questions. No, that's why I'm here. I'm here. You know why I'm here? Because of you.
Is if you were long PDD, would you look to add? And if so, how would you go about it?
Good question.
Would you look for a takeout of the first hour high?
Good question. Okay, so I'm going to assume you're either long here or here, okay? And it's going up, all right? So that's an important point. If you bought it today, that's a whole different story. But if you're long from lower, okay, then we can address this. So here we go. This is the daily chart. Let's take it down to the hourly. Here's the first hourly bar. Take it down to 30 minutes. That's the first 30-minute bar. And you can see what you have here. You have a up bar on heavy volume, and you have a small inside bar. Take it down to 10. Here's the 10. And I'll do this for you. Little base pennant forming here. You could watch this on 30-minute or 10-minute. If it takes out the tops of this bar with volume, that's mandatory. If volume isn't coming into it and it's taking out that line, don't buy it. But if it's lifting through that line with volume, you could add to it. How much? Go back to the daily. Let's always frame it up with risk, because it is very extended. The most I would add would be 10 or 20%. Why? We don't want to chase price too much, and we don't want to pull our average price up too much either. Okay? That's really important. So also factor into the equation, thought processes. Market is a little squirrelier here. So there's the spiders. Okay? Here's the NASDAQ comp. Okay? I don't care about the Dow. Here's the spiders again. So control risk. Don't go too big. And people can respond, you're not, I know you're not what you're thinking, but submit, well, geez, then I won't make as much money. And I'll say, given the current risk, you won't lose as much. There you go. Okay, Micron's down here. If this loses, if it stays down here, we're going to sell the rest. By the way, sells into strength really helped, didn't it? There you go, folks. If you hadn't sold any, would you be irritated? You go, dang, yeah, but I had a chance to sell some up higher. We did. There we go. So we'll watch and see. Price alerts are set. Scroll down the key list here and just take a look at them. AER is nothing. Amazon. AOS is basing. Guidewire is basing. PEG has formed a cup with a handle. Used to take out this handle here with really heavy volume. PGTI, we know about it. We've discussed it. It lifted off and it pulled right back. We're in this. Okay. Small to start. We'll watch this. Don't like that. Roku's lifted up. Pulte Homes is basing. SMCI, little loose in here. Okay. So we'll be cautious if we buy that. Toll Brothers is nothing. That's my, that routine works, team. It really does. Something I've been doing for a while, and it just works. Oh, and you got any more questions? We could do it, or we could handle 40 stock market winners. Whatever you want to do is fine with me, sir.
Yeah, we got a couple of questions here.
Okay, buddy.
Let's see. Learning for Life wants to talk about MarketSmith charts. He says, please explain the accumulation and distribution rating because it seems confusing or counterintuitive. As example, a stock may have an E or D rating, but the price is actually going up nicely, and then a stock with an A or B rating may be going down. How can that be? How can that be, as it seems like D or E should mean a falling price, not going up, and an A or B rating should mean the price is going up, not going down?
Good analysis. See, you're going in deep. I like that. The accumulation distribution rating isn't just taking into consideration the price combined with volume action. And that's the key phrase there, folks. Price combined with volume action recently, but it's over some time. Okay, it's taking a look at that. It's taking both constraints into consideration. And you can have a stock that's going up in price and it has an accumulation distribution of D. And you're going, how the heck can that happen? Because earlier it was selling on extremely heavy volume and it's going up on much less volume than it fell on. So it could have a low accumulation distribution rating. Okay. You can also, and this is a great tactic for everybody, and I've shared this with you, so it ain't a surprise. Okay. When I'm scanning the charts on MarketSmith and on Instant Windows, I always have the weekly chart and the daily chart side by side. And you can see a stock, maybe we could find one. I don't know if I'll be able to right now. No, I know that's good. Let's see here. We'll just try this. No, that's not an example. Hold on. I probably won't be able to find one. No, because most of the stocks we have accumulation in them. Are they not? They're not on the list, right? Yeah, see, that's got accumulation on the weekly. SMCI. I can't find one right now because I'm pretty stringent. If it doesn't have good accumulation distribution, I normally don't even have it on the key list, and that's what I'm looking at, the front page. That's how they'll do it, though, is they're taking into consideration the price and volume action. You can have a stock team going up in price, but if there's not a lot of volume power and that volume is less than it did when it was falling in price, the accumulation distribution rating won't be that high. All right. And I really lean on that. I want stocks that when I look at that AD rating, they're being bought. I want to know that big money, not little money, big money's buying the stock. And so on most of my screens, I have an accumulation distribution rating of A or B. You can say, well, you might miss something. I don't care. From a statistical perspective, I know I stack the deck in my favor. I can live with that. You can say, yeah, but what if you miss one? I want to stack the deck in my favor and your favor as best as possible. That's why I like A or B. It works. They're buying it. They're buying it. So that helps us. Oh, and I'm going to flip that coin and say this. I don't know the last time I bought a stock with an accumulation distribution of D or E. I don't. Owen, you and I have been working together for a long time. You haven't seen that either, have you?
No, it's not a pond that we typically fish in.
Yeah, there you go. That's well, I like that. There's fishing in a good hole. That's exactly right. Yeah, we try to stack the deck. Here's a great mindset for you. If I told you that statistically, the vast majority, 80 to 90% of the stocks that make good moves, when they start, they have an accumulation distribution of A or B. There you go. I can even say 70%. 70% plus have an accumulation distribution of A or B when they start. Okay, I'll stick with that. I'll use that. Oh, I might miss one. I'd rather, again, use the foundations we have to our advantage when screening and stick with that. We might find the outlier, but I'd rather go where there's greater probability, odds of making money. And A or B tells me they're buying it. Big money is buying it, not little money, big money. I'm sorry that's a long answer, but I use it. I'm going to say this again, too. I want to circle back. Don't forget, look at the daily charts, but also look at the price volume relations on the weekly. It'll help you make better investing decisions. Is there anything there? You know, I mean, you look at this and you can say, I just grabbed this one, okay? I hadn't looked at this before, okay? You can say, there's some accumulation coming in there. You go to the weekly and go, boy, they were really buying the tar out of that sucker there. Look at that. Look at those green volume bars. There we go. That helps us. It helps us make better decisions. PGTI volume was just okay, but man, was it heavy on that bar. Look at that. That's huge. It's off the charts. And then it goes sideways and you take it down to the daily and you can say, yeah, just meandering here on very low volume, which is very constructive when it's basing. Remember that. Low volume when it's basing is very constructive. And then it lifts off on a pickup in volume. On this bar, the stock did 152,000 shares. On this bar, 619,000. Almost 4 times as much. They bought it. Is it going to work? I don't know. But more times than not, it does. And that is our edge. I'm sorry if team, I need to share this. I know I give longer answers. And the reason why, I want to be thorough for your sake, so nobody walks away saying, geez, I still don't know. I don't know. I don't want to do that. That's very frustrating. I try to be thorough. And if I talk too long about it, again, I just want to be thorough. I don't want a stone unturned. We'll do another one if we got him, buddy.
Alrighty.
Alrighty
Craig wants to know, where's the best place to find top stocks in ETFs? And he's talking about specifically on your ETF list. But he wants to know if that can be done in MarketSmith.
Yes. In fact, if anybody wants my ETF I need to back off. That sounds arrogant.
You guys all have Pat's ETF list already on every ETF video and maxlist video that goes out over the weekend. We put that in the description of the video.
There you go. Owen, you're just a wizard. I'm telling you. He's exactly right. You got him. And folks, I'll tell you what, that is a great, here's mine. And I just scan them very quickly. And I'm looking at it right now. And I can see at this point in time, what do you see? I see a little bit more red than green. Tells us to be cautious. Here's the max list. A little bit more red than green. I mean, we went through this before. Here's the IBD write-up page. Look at that. A little bit more red than green. Tells us to be careful. Isn't that neat? I mean, team, in literally, you ready? I could just click this. In 1 second, it says, got to be a little cautious. There's a little bit more selling than buying right now. Done. Done. And I don't argue with it.
So on MarketSmith, Greg, just bring up an ETF on the chart, and then on the right hand side, click on industry and sector, and then you can just click on the button that says View Stocks in that industry, and it'll populate a list for you down below.
There you go.
All righty. JC wants to talk about up down as compared to AD. He says, how does the up down compare to AD?
Ooh, that's a good question. And I use both of them. I'm not going to lie to you, okay? I'm not going to make something up. I don't do that. I don't know the specific. I could look it up, okay? But right now we're in the middle of a Discord session. I could look it up, and it'll show you on MarketSmith the difference. Let me do something real quick. Hold on. Bear with me. Hang on. I'm checking something. Box 9. You're not going to give me anything. Trying to find a definition here. Let me just look here. All righty, here, up, down volume. I'm going to read this. This is straight from MarketSmith, okay? Up, down volume is a ratio of daily up volume. I'm reading slowly, by the way, okay? Up, down volume is a ratio of daily up volume to daily down volume. It is a ratio of daily up volume to daily down volume. The 50-day ratio is derived by dividing the total volume on days when the stock closed up from the previous day by total volume on days it closed down. A ratio greater than 1.0 implies positive demand. That is the up-down volume ratio. Now let's see if they give on this template the accumulation distribution. I'm looking. I don't see where they have it posted on this template, this older template here. Accumulation distribution, box 14. Okay, here we go. Hold on. The accumulation distribution number or letter, okay? Again, AD ratio. You ready? This is straight from MarketSmith. A proprietary rating including daily volume, price movement, and direction in the stock price. I'm going to say it again. A proprietary rating including daily volume, price movement, and direction in the stock price. A is the strongest and E is the weakest. It should be used with other fundamental and technical factors to arrive at an investment decision. And you know what we do, team, here. We take into consideration the advanced decline, AD or up, down, whatever we want to use. And we always factor it into the context of what the chart is doing. And that helps us. And I really lean on an advanced decline of an AD, A or B. It tells me it's being bought. I really want that. I don't want to, and say, well, maybe it's going to turn. I don't want to play the maybe game. I want to know the stock in those ratios is being bought. And that helps us. Or at least it's neutral. They're not selling it. And I'll never buy a stock with an accumulation distribution rating of E. I just don't. Or I can't remember the last time I did with D. So we try to stack the deck in our favor as best we can. And that helps us.
Alrighty. Joining us from YouTube today. I'd like to welcome all you guys that are joining us from YouTube. We're broadcasting it via Discord through YouTube for everyone today. Himalay says, Pat, what moving averages would be good for weekly and monthly timeframes?
Good question. Great question. On weekly, I pretty much transpose out. I use the 8-day on the daily chart, okay? I will use on the weekly charts, I will use by the way, I use the 8-day exponential, and I will either use the 8-week exponential, this is a weekly chart, or the 10-week simple. The 8-week exponential or the 10-week simple moving average. And the 10-week simple moving averages, if you think about it, that transposes into, 10 divided by, it's the same thing as, 10-day moving average, which I like. It works. It really works. For me personally, I like the 8-period exponential moving average on the daily, but the 10-day simple moving average works great. I'm going to do a broad brush stroke for you all. Here are 3 great moving averages that you can use. And I'll give you 4 on a daily chart. The 200-day simple, the 50-day simple, the 20-day or 21-day simple, and the 10-day simple. Okay, what do I use? I use the 200-day simple. I use the 50-day simple. I use the 21-day exponential, and I use the 8-day exponential. Okay, 8 and 21 are exponential. Who had a profound impact on me on the 8 especially? A guy that I met years ago, Ed Sakota. He uses, I don't know if he still does, he uses the 5-period exponential, and a good friend of mine who's in this room and myself worked really hard and did a tremendous amount of back testing, and we found the 5's just a little too close for stocks. 10 simple was a little too far. A good medium was the 8-period exponential, so that's what I have on my charts. Now, that's what I use. I'm not telling you what to do, but I will tell you, there is years of research in that 8-period simple or exponential moving average, 8-period exponential. I mean, years of back testing with my buddy, my brother. So there you go. I'm sorry if the answer is longer, but I just, out of respect for you, here's something really important for everybody to hear. Nothing is more maddening than having a question and not getting an answer. Okay? I had an advanced level statistics class. I asked the professor a question. He didn't answer it. I quit the stock that day. I quit that class that day. I said, the heck with that. You don't have time to answer my question. I'm done. So I take the question seriously. We can do some more if you got them, brother.
Let's just take a look here. Steve's got a question about Market Smith. He says he wants to make his Market Smith. He just signed up for Market Smith.
Good for
you.
He
says, I'd like to have my charts look like yours. Is it standard? You just use the standard view on Market Smith. Would you also consider doing a video on how you review stocks? That'd be a good video to do, by the way. We haven't done that one in a while. I know you've done 1, maybe 2 of those videos where you go through your whole list of stocks from your master list and create the key list. But it might be time to do another one. He says he just wants to learn. Here's that fishing reference again. He says he wants to learn how to fish better.
I love that. First off, I admire your ambition. That's huge. Team, I'm really big on mindset, okay? It's part of my background with other things I've done. Mindset is crucial. This is a great quote. It's not mine. I think it's Dave Landry's. I never met a wealthy pessimist. Opportunities are there for us. It's not going to be easy. I'm not going to sugarcoat say, oh, this is it. We'll all do the happy dance. We're all going to make a lot of money. No, you've got to put in the time and work. Would you go to, each of you is a doctor of investing, or that's what you're aspiring to. Would you go to a doctor that's been studying his or her practice for a couple of months? No, it's the same thing here. And one of the best things you can do, and this is what we do in Mission Winners to really speed it up, you want to get good at finding stocks that go up in price, study charts of stocks before they go up in price. And we pick them and we say, look at this. And then before and after, oh, look at this. Oh, look at this. And you train your mind and your eyes on what to look for technically in the charts to make money. And it works. Now, I'm going to back off here and say something. Does it work every time? Come on. Nothing works every time, which is why we limit losses. Bill O'Neill, everybody, every great investor I know. Martin Zweig, who I met years ago. What a great man. They all control risk. You got to limit losses. Martin Zweig, credit where credit's due. When I was running money in the crash, before the crash of '87, listening to him and the guidance and talk, all my managed accounts were out before the crash of '87. I credit him, okay? Not me. I credit him. But I was watching the price and volume action, and you could see things were dropping. Never argue with price. Never. It will really help you, folks. I honest to God, I'm not kidding. Don't get mad. Don't get even. Never average down. You're wrong. Don't make yourself more wrong by averaging down. Please don't do that to yourself. You'll dig yourself into a hole, okay? Keep losses small. By keeping losses small, this is really important, folks, it protects you financially, but it also protects you psychologically. You know what's one of the worst feelings? Every day you come in and you look at the stocks that you own and you're down in all of them. And they're not going, and they keep dropping. It's awful. Don't do that to yourself. I really mean it. Two major forms of capital in investing: financial capital and mental capital. You got to protect both of them. I got off on a tangent here, but I'm telling you, if our heads aren't screwed on straight, this ain't going to work. And that does help, honest to goodness. Oh, I'm going to take it one step further. This is for everybody. If you are facing a major crisis in life, okay, maybe you're getting divorced or you're going to have serious surgery, whatever, or, you know, your kids are going to have serious surgery, your spouse is going to have whatever, okay, back off a little bit. Back off a little bit. Just, the market's not going to go anywhere. It's here today. It'll be here tomorrow and the next day and the next week and so on. Don't force things, please.
So did we actually answer the question for Steve? Where I know that I said a lot in that when I said that, but are you just using the standard setup on MarketSmith? I mean, there's no adjustment really on there, is there?
No adjustments, no.
Yeah, I didn't think so.
Yeah, and it works.
Now, Steve, I will tell you this: Pat's version of MarketSmith, the one that he uses in the videos, is an older version. It doesn't have the pattern recognition built into it like the newer versions. Like I'm sure yours does. And it's just because he's had that subscription for a couple plus decades, and that's so it looks maybe just a little bit different. Yeah. But I do want to follow up with Steve on this. This is great. Steve has been with us for a while. You know, I think you know who I'm talking about. Steve and I have talked on the phone a couple of times, and he says, "I'm so glad to hear this. I'm having my best year ever. Thank you very much to Mission Winners. Thank you guys. Still learning to put on size is my biggest headwind. That is a challenge. Position sizing is huge, but congratulations, Steve. I'm really glad to hear that."
I got to tell you, this is for everybody. I rejoice in your successes. That ain't a line. It's the truth. I love it. This isn't easy, okay? It's hard, but we try to constantly give. I say this a lot. I wish I had $1 for every time I typed or said the phrase clean and simple. If you focus, here you go. This is probably one of the better ones. All right. That's a weekly. Here's the daily. Clean and simple base. You focus on this, things get better. Fro, clean and simple base, things get better. TNK, Clean and simple base, things get better. When you finally make up your mind and say, I'm looking for this, okay, by the way, always good stocks and good groups with good numbers, okay, let's remember that, and say, I'm doing this, and when it goes and there's volume coming into it, which there was, people are voting. People talk with their mouths and vote with their pocketbooks. They're voting. You buy it. There you go. And here's the beautiful part about it. Price is good above the line and bad below, which helps you keep losses very small or much smaller. And that helps us too. Got this going off here. ZS is recovered. Okay, good. We're in good shape. Clean and simple base right there. That really helps you. I can't stress that enough. Microsoft, look, these are all the stocks we got. This ain't a sales line. I'm just, honest to God, this is something I wish somebody would have said to me a long time ago. Why are you screwing around with some of these patterns? Nobody sees these. Focus on patterns that everybody sees. It increases the potential that A, they see it, and B, they'll buy. And isn't that what we want? Yeah, that really helps us. So just wanted to do this form here, but it's not doing anything yet. We have to watch it. Anyway, we can do some uno mas. If you have them, only.
We've got them. 1 second here. Let's just switch. Let's see. JBL. Put up a chart of JBL.
JBL?
Oh, you know what? This might be a Market Smith question. JC he's referencing back to the up-down volume and the D plus rating. He says, for instance, JBL is D plus, but 2.1 up down. And as I see your 40 stock market wizards behind there, maybe we're getting a little bit too off here a little bit. Maybe this should be handled at another time because you haven't even gotten to what you wanted to talk about today.
This is helping me not be so shy. Okay, I'm looking here. Hold on. Bear with me. Looking here at JBL. D plus accumulation distribution on the daily chart. I'm looking at the weekly.
And you can slide that Market Smith chart right into this screen.
Okay. This screen here. Do you see it? Or the far left screen?
The screen that you've got the, that one. Yeah, that one.
There you go. All right. So here's the weekly chart. Okay. Yeah, there's some accumulation that's occurring in there, steadily dropping off a little bit, but it's still not too bad. Let's go to the daily and take a look at it. I see some accumulation, but there's some selling bars here and here. There's a cluster back here. There's a pretty big cluster back here. And there's a lot of distribution back here. Look at all that. That's a lot. So factor that into the equation. Now, let's go to the weekly. And I got D plus accumulation distribution. Yeah, up, down. I tell you what I do, folks. I lean on accumulation distribution. I like it. It's worked for me. It's worked for me for decades, and I lean on it. And it works. It works. By the way, this does have a composite rating of 93, okay? But you can see it fell here. We'll just address this. It lifted up on earnings, okay? By the way, the earnings aren't that great. And there's a deceleration in earnings, and there's a deceleration in sales too, okay? It's just basing here. They have earnings in 21 days, so you have time. Had decent volume yesterday. This is the 21-day exponential moving average, the purple line. By the way, that's the 50-day simple. Purple's 21-day exponential. Green is 8-period exponential. Those are the ones that I use. I'm not telling you what to do, but that's what I use. It's just basing here. It needs to lift across this top, and it needs to do it with really good volume. That's the key. People talk, excuse me, people talk with their mouths and vote with their pocketbooks. Go where they're voting. That will help you. Good. Good questions. We can do some more if you got them, buddy, or we can go to 40 Great Stock Market Winners, whatever makes you happy.
Let's knock out this last one here. I'm going to touch on this real quick, and then we're going to take Tony's question on Affirm. Kurt, we don't use anything like that. We don't use MACD. We don't use bands. We don't use indicators like that. So we're just price and volume guys. Tony wants to talk about Affirm. AFRM. This has got a lot of buzz recently. There's been some articles written up about consumers having the option of putting purchases on deferred plan with zero interest, and that's what she's referencing here.
Yep.
She says that as an SMR rating of D, timeliness group rating C,
Yep.
and
composite rating to 77,
and an AD of B plus. So
yep. And that happened after yesterday. Okay. And I do believe the reason why is it was earnings. I'm pretty sure earnings did that yesterday. So here's the game plan. Nope, I take that back. Earnings was here. Must have had news of some sort. Here's a classic example, folks, where you've got some stringent foundations. First off, it's not in a good group. It's got a composite rating of 77. Relative strength's 99, and that's fine. There's always outliers. But my foundation is this. I want to stack the deck in my favor as best as possible. If I said to you that 90% of the stocks that go up in price have a composite rating of 90 or higher, okay? I'll make up a number. 40% of the stocks that have a composite rating less than 80 go up. Where would you go? We strive. You can always find the exception to the rule, but I'd rather stack the deck in my favor and go where more money has the greatest probability of going. And that helps us. It works.
Yeah, it's very hard to predict news events, right? There was a news event on this over the weekend, it looks like.
Yes.
Looks like ABC News talked about how more Americans are expected to use the buy now, pay later services this holiday season, and I guess they specifically mentioned AFRM.
There you go.
It was also upgraded just today, right today, at Jefferies. And Jefferies had some words to say about it that were, a little bit bullish.
I'll take it a step further. The time to have bought it was yesterday in here. Please, if you don't own it, don't buy it up here and chase price. You're opening yourselves up to bigger drawdown risk. So just, if you own it down lower, you can add to it if you want, but always have an exit plan too. And I'm not saying it's going to drop. Not that at all. But just at Mission Winners, we always have a plan to buy, and we always have a plan to control risk. And that helps us. Everybody thinks about being a good buyer. It's good to be a good seller too. In fact, it's great to be a good seller, to limit losses or to lock in profits. And
that wraps up the questions on the VIP board. For you guys joining us from YouTube, visiting in, we are we have to handle those VIP questions. So if you did post a question there on YouTube and we didn't get to it, we apologize. But we're only supposed to go an hour today, and I know we're going to go longer because Pat's going to get into his 40 great stock market winners right now, and take it away.
Well, all right, let's do it. Can I get a drink of water first?
No, we don't have time for stuff like that. We got things to cover.
We got things to do. Hang on, I'll be right back, okay?
All right, you go do that. Throw a chart up with ELF for me, will you please? Rakesh just says, could you please check out ELF?
Well, certainly.
All right.
Here we go. There we go. ELF lifted off here, tailed off a bit.
Take your instant chart and put it back over on that monitor.
You want me to do that too? Okay.
So many instructions.
There it is.
There it is.
Okay. There's some accumulation that occurred here. Here's a great lesson for you. You see that green bar? Note where it opened and note where it closed. I'll make this bigger for you to help you. It was met with some selling pressure. So it worked through there and then it finally lifted up. But notice, team, it's loose. It's loose. It's choppy. Okay. There is some accumulation occurring in here, and that's good. So how do we control risk here? Two things. A, don't buy it. Or B, if we do buy, we buy less shares. And that really helps us. There you go on ELF. It had decent volume yesterday. Okay. You can see the volume spike, and that's good. So let's take it a step further. So let's suppose you buy this today. All right. What do we need to see? Well, we don't want to take out the lows of today. If it does, you might want to sell a little bit off. And then if it takes out the lows of yesterday, you definitely want to sell more because it's lifted through tops and it's coming back into the base. I'm stressing, I'm not saying that's going to happen. I just want to point out we always have a plan, and that helps us a lot. Gold is picking up a little bit here. Okay, Owen, I'm going to get some water and come on back here, and then we're going to go through 40 stock market winners. Sounds good?
All right. Sounds good. Sounds good. I just jumped over to YouTube, guys, and I'm going to take a look at just see what's been going on in here. Rich has been monitoring this and posting questions that he felt were relevant, and not that the rest of them aren't relevant. It's just there's just no way we can get to everything. But John posted here, could you show how to manage a position more trail out when you actually close a winning position? What we do, John, is we sell into strength. And I know you're looking for specifics here. What's your criteria for taking partial profits? But what we do is when something lifts up and it has a significant move up, we're going to be selling 20% into strength. We sell off in pieces. We sell 20%, and then whatever's left, for instance, 80% is left. So the next time we sell 20%, and that's going to be 16 shares versus those initial 20. And we just piece that out over a period of time as the stock moves. And we're very, very good about continuing to talk about, how to scale out of positions. It's something that we focus on, something that we do all the time with every position that we're in, unless it fails and then we're out. But it's very critical that we hang on to a position as long as we possibly can. And the way that we do that is by scaling. So we, it's not like I'm saying, you have to join Mission Winners to learn this, but it's just too big of a question to go into in a short session like this. So I hope that helps you to some degree. If you have any additional questions, feel free to send me an email to our help desk, hello@missionwinners.com, and I'll do my best to help you. And Pat, are you back with water yet? Pat went to get watered. Dave the Trader says, thanks for the webinar. You're welcome, Dave. Hope that helps. 2 diagonal lines. Yeah, those are marks for indications that that's when the stock was written up in IBD. Pat tracks that information, has a whole list of stocks that were written up in IBD and tries to keep that updated on a regular basis. Modern growth investing, IPOs, SN and ARM. We do track IPOs. I'm not familiar with those two stocks, and I don't have control of the charts, so we're going to turn it back over to Pat here in a second. He's going to go through what he wanted to talk about. He had are you back yet, Pat?
All right, I'm back, good buddy.
All right, sounds good.
Rock and roll. All righty. So Owen, if I slide Ensign over, can you still see 40 great stock market winners?
Amazingly enough, you bet we can. Absolutely.
This is awesome.
Our computer's great when they work.
Yeah. I'll tell you what's even better, though, is working with a man who knows how to use the computers. And that's you, buddy. You are the wizard. Any way we flush it. Anyway, team.
Hey, I'll tell you what. Why don't you hit the F11 key on your keyboard right now. Let's just maximize that window.
Okay, F11.
F11. There we go.
Excellent. Thank you, sir. All right, so we are looking, just to clarify, we are looking at 40 great stock market winners, correct?
Yes.
Okay, good. Just wanted to make sure. Team, a little bit of background. I've been doing this, I've been managing money, running money since 1986. All right? And yes, I was there for the crash of 87 and monitoring the markets, watching them closely, the price and volume action. I'm really big on that, okay? Weekly and daily charts. It allowed me to, and I'm grateful for this, all my managed accounts were completely out of the market before the crash of 87. Now, I have to give credit where credit's due. A man who had a profound impact on my thought processes there was a man named Martin Zweig. And I'm grateful to have met him a couple of times and talked to him. He was a kind soul, and it was sad when he passed away. But he helped a lot of people. He helped me, and we just had some nice talks. Anyway, another man that I had the great pleasure of meeting with a couple of times and talking with, and actually had sat down with lunch with him, is Bill O'Neill. This is his publication, all right, 40 Great Stock Market Winners. This is a great resource. In fact, I don't know if you, I'm not, by the way, I'm not here trying to sell anything on this, okay? I don't even know if you can find this anymore, but the data in here really helped me. And that's why Owen and Rich and I wanted to do this, is to show you. So Owen, to advance to the next slide, what do I do, brother?
Oh, you can just click the next one in the list on the left.
Okay, good. There we go. There it is. Now this is, folks, this is an older publication, and here it is. You can call them up and see if they have any. I don't know if they do.
They do not. We've tried very, very intensely to get more. They're not available.
Okay, very good. I've got an alert going off here. Hold on. Okay, ZS is still working. All right, good. Let's go to slide number 3. These are the stocks that are in this list. I'll pause if you want to take a picture of it. By the way, I have to tell you, some of these companies aren't around anymore. They've been bought by another company or they're gone, okay? But we're going to go through some of these and you will pick up some profound information. In fact, I will tell you this, the next slide right here is golden. And I'm not going to go through all this, but point number 2, and I have screens on MarketSmith, and I was in the beta test group for the original product, so I know a little bit about it. Point 2, 87%, folks, basically 9 out of 10 of the stocks in this book had earnings up 30% or higher prior to their breakout, prior to their moves. 9 out of 10 had earnings up 30% or higher. I'm going to say it again. 9 out of 10 had earnings up 30% or higher. That is a statistical edge that you can use. You can say, well, I might miss something. Stack the deck in your favor. I don't really give a rip. I'd rather go here. Right here, this is good. 86%, almost 9 out of 10 had sales up 30% or higher prior to their moves. Almost 9 out of 10 had sales up 30% or higher. So there's 2 huge things there. You can say, you know what? I'm going to stick with stocks that have either great earnings and or great sales. That's really huge. Point 9. More than 2/3 were a result of a group or industry moves that occurred due to strength within an industry. 2/3. What does that tell us? I say this all the time. I've said it here already. Leading stocks, leading groups, leading groups, leading stocks. Okay? And what do I mean by leading stocks? Quantify it. Most of the outstandings showed a period of greater strength in the general market before their major move occurred. Okay? They were already acting good. We don't buy weakness, we buy strength. We look for strength. The average relative strength before their big move was 92. Oh, folks, you can use that to your benefit. You've got some great tactics there that you can use. All right? I just want to share that with you. Continue onwards. Here we go. Here's access, and I hope you can see this. Key points. We're just going to fly through these. Look at the clean and simple flat base. All right? This worked. Can we enlarge this at all, Owen? There we go. There we go. Right here, folks. Sales up 126%. Clean and simple base breakout. Accumulation distribution A. All right? Group rank 92. Was at the top 5 stocks in the group. Clean and simple flat base. And again, folks, this is research from O'Neill and Company. All right? This is powerful data that we've used. I've got to share this with you too. Just a couple of key points I have in the book that I'm looking at. Again, 87% had sales earnings up 30% or higher before they broke out. Almost 9 out of 10. Okay? 86% had sales up 30% or higher prior to the move. Almost 9 out of 10. That's huge. Most of the outstanding successes showed a period of greater relative strength. The average relative strength for these stocks before their big moves, as I stated, was 92. I can't stress that. All of them All of them had positive earnings estimates. All of them. The average estimate for the coming year, plus 48%. Now you've got power. And you can see this clean and simple base, see the volume coming through here? And these patterns still happen today. America Online, relative strength 99. Look at the numbers here, folks. Base pushing through 120. There you go. Continue onwards. American Power Conversion. Please look at the numbers. 83% increase in earnings, 86% increase in sales. Timeliness A. Earnings per share rate 99. I don't really lean on that. What I really concentrate on, and this is for everybody, I want companies that last quarter's earnings were up 30% or higher, or last quarter's sales up 30% or higher. And I always like a high composite rating. I prefer 90 or higher. Now hang on a second, I gotta check something, bear with me. Yeah, Roku's working. Here's something else though I really want to point out. You'll notice this. All of these except one had a timeliness of A before they broke out. How about that? All of them had a timeliness rating of A. All of them but one had a timeliness of A. The one that didn't had a timeliness of B. Now you can see how we're stacking the deck in our favor. You can see the clean and simple base. You can see the volume coming into it, and look at the numbers. Now you could say to me, Pat, this was a long time ago. The data is still relevant today. Certain things don't change. Institutions still look at the numbers. Okay? We look at the numbers. And I have since the late 1980s. There you go. Continue onwards. Note the numbers. Okay? Timeliness A. Group rank 96, relative strength. Strong earnings per share rating. Good estimates. Good numbers. Clean and simple base. Relative strength, as I said, 90. Up-down volume ratio, 1.5. I'm going to back off here a bit and tell you this. Focus on stocks that are being bought already. Strength begets strength. So I'm going to try to buy the bottom. I don't know where the bottom is. Buy strength. You will dramatically improve your investing results. One of the things you can look for, clean and simple base formation and an accumulation distribution of A or B. And I'll say it again, focus on stocks that have either great earnings or great sales. I'm going to circle back to this and say it again. 87% of these 40 great stock market winners, almost 9 out of 10 had earnings of 30% or higher before their breakout. Almost 9 out of 10 had earnings of 30% or higher. 86%. Again, I really want to stress this point. Okay, folks, why am I so serious about this? We're talking about your money. Okay? And which could have a direct correlation on your health, which can have a direct correlation in relation to your family. That's why I'm so serious about it. All right? I had to get this right. I didn't have a choice. I had to get this right. I was the sole supporter of a family of 6. As I said before, I had to. And I was also helping to support my mom. 86% of the models had increases of sales of 30% or higher prior to their breakout. Folks, almost 9 out of 10 had sales of 30% or higher. 9 out of 10. Can you use that? I think so. I'll say it again. All of them had positive earnings estimates. All of them. The average estimate was plus 48%. The average relative strength on these stocks before their big moves was 92. All right? We're going to continue onwards. Now, this is a new issue. Excuse me. This is a new issue. Shorter base. Lifted across these tops. Look at the volume surges here, and then look at the volume follow through here. This stock went up. I still remember this one. This stock This is from 1993. 1,300% in 15 months. Wow. But please note the numbers. Note the estimates. Note that there were other stocks in the group that were working. Continue onwards. Ballard Medical. See the clean and simple base right here? I talk about this a lot at Mission Winners. Clean and simple flat base. Sales up 30%. There we go. Going across the tops. Timeliness A. Earnings per share rating 91. Everything that we look for. It works. And again, I really lean on a composite rating. On all my screens, I have a composite rating of 90 or higher. CQ, 425% gain in 8 months. Note the numbers. And again, folks, this isn't my research. This is research from Bill O'Neill and Company. Okay? Look at all the other stocks in the group. Look what their relative strength rating is. That's what we look for. Note the numbers. It really works. I'm going to pull back here and share something with you. All my screens, I will tell you this, all my screens have a minimum composite rating of 90 or higher. All of them have an accumulation distribution rating of A or B. I'll just tell you that. There's other constraints in there too. Let's continue onwards. Callaway Golf. Note these numbers here, folks. There we go. Timeliness A, up-down volume 2.6. These were the numbers we were looking at before it broke out. Okay? And look at the estimates going forward. That's what we want. That's what we want. Over and over. Continue onwards here. Hold on. And just take notes on these, okay? And just soak it up. It will really help you. Cisco Systems. I remember this company when it broke out. Lift it up. Note the numbers. Look at the earnings and sales. Please note the earnings and sales. Timeliness A. Earnings per share rate 99. When this broke out, I guarantee the stock had a composite rating of 95 or higher. And it worked. It worked. Note the relative strength line lifting off here. That's what we look for. Computer Associates. Please note the numbers. 67% increase in earnings over a 60% increase in sales. Earnings per share rate 96. Good estimates going forward. Clean and simple base. Relative strength 92. 92. There we go. Costco. 100% gain in 7 months. And again, folks, this is research from Bill O'Neill and Company. Okay? Look at the rising earnings estimates. Other stocks in the group's doing great. Earnings up 81% last quarter. Sales up 34%. Clean and simple base. Relative strength leading the stock into new high ground. You can see the base right here. Just going sideways. Look at the volume spikes coming into it. And I'm hoping this helps you. Dell Computer. Nice run here. Look at the numbers here. Look at the acceleration. Plus 53, plus 74%, plus 108%. Okay. Relative strength leading the stock into new high ground. I'm going to say something to you. I'm saying it again to help you. All my screens, and again, I was in the beta test group for the original product. All my screens have a composite rating of 90 or higher. All of them. You say, I might miss something. I don't care. From a statistical perspective, I'm stacking the deck in my favor. And that's what I want. Isn't that what you want? All of them, an accumulation distribution of A or B. I also focus on stocks in leading groups. Okay? Just tell you that right there. Dreyfus, clean and simple base, going across these tops. Numbers are okay. Growth rate's 56%. I think that's pretty good. I can live with that. Okay? Relative strength leading the stock in new high ground. Breaking through on volume. EMC Corp. Yeah, and I remember this one too. Going across these tops. Look at the volume that came into it. Please, by the way, it sounds like I'm barking orders. I don't mean to do that. I apologize if it comes across that way. But I get enthused about this. You know what we're doing here? We're showing you, we're giving you a recipe to make a great cake. When we make our minds up to say, this is what I'm going to do. I don't care if I miss other stuff. I'm stacking the deck in my favor, and it works. I'll put my screens up against anything else out there. And I'm not bragging. There's a lifetime of doing this in those screens. So we had to make it happen. Look at the numbers. They're huge. Look at the relative strength line leading the stock in the new high ground. Look at the volume coming into it. I'll say it again. People talk with their mouths and vote with their pocketbooks. You see that volume coming into it? When it's going up, they're voting. They're voting. 500% gain in 16 months. I remember this move. There you go. EMC Corporation. This one's a little loose, okay? This one got a little loose, but there was some accumulation in here. And if you look at the weekly, I do believe, if I remember correctly, there was a spot going through these tops here at 30 on a weekly, and it lifted off. Note this, the number one leader in the number one group. There we go. 37, 33, 39, 31. These are the things we look for. I'll say it again. I love stocks that last quarter's earnings were up 30% or higher. Or, I didn't say and, I said or, last quarter sales up 30% or higher. Always a high composite rating. Always in leading groups. Always. It will help you. Let's continue onwards. I hope this is helping you. All right? Earnings per share at 99. Timeliness, A. I will tell you something. The name of this book is 40 Great Stock Market Winners. Do you know 40 stocks, 39 of them have a timeliness of A. 39 out of 40 have a timeliness of A before they broke out. These are things you can use to your benefit. Strong relative strength. Stick with that. Use these constraints and these filters. It will help you in your searching for winners.
That's what you called me about over the weekend. Remember? You called me about the timeliness rating. You were all excited about it, that you found that 39 of them had a timeliness rating of A.
You got it, buddy. See, folks, I need to get a life, I guess. Yeah, it was so cool, though. Owen's right. I called him up. Going through this book, tearing it apart, just seeing different things. And all of a sudden, we're going, holy cow, 40 great stock market winners. All of them, I'm saying it again, all of them had a timeliness except one. 39 out of 40 had a timeliness of A. And you can say, hey, Governor, that's something I can use to my benefit. Yeah. You say, I might miss something? Stack the deck in your favor as best as possible. It'll help you. Continue onwards. Home Depot. Going across. Oh, timeliness of A. I'll be darned. Good numbers here. Look at this. Look at the base. There it goes. Clean and simple. Look at the volume surge when it pushes through that spot. Is that awesome? I love that. Continue onwards. International Game Technology. I don't know. That was probably before your time, Owen. I don't know. But IGT was a good one. Pushing through these tops. And it works. And it worked. Note the numbers. Look at that. 30% or higher. I'm telling you, team, let's make a recipe for a cake. Earnings up 30% or higher. Or sales up 30% or higher. Stocks in the top, I'll say 40 or 50 groups. Okay? An accumulation distribution of A or B. Composite rating 90 or higher. All right? Over $12 or $15 a shares, and it's within 15% of 52-week highs. 10 or 15% of 52-week highs. Right there's a screen, folks. I got that screen. Okay? And it works. It's like I might miss something. Stack the deck in your favor. From a statistical perspective, you've got two people fishing in different fishing holes. And every 10 minutes, the person in fishing hole 1 catches a fish. Every 30 minutes, the person in fishing hole number 2 catches a fish. Which hole are you going to go fishing in? I know it sounds goofy and stupid. I don't even fish. I don't like fish. But anyway, you get my point. Stack the deck in your favor. That will really help you. All right? And again, I'll say this. I had to get this right. I was the sole support of a family of 6 with 4 kids in private schools at the same time and a stay-at-home wife. I had to get this right. And we were living off investing profits. And I'm not bragging, I'm grateful. But I didn't have a choice. I had to get this right or I'm going to wreck my family. LHSP, I still remember this one. Oh, back then though, it was LHSPF, foreign. I still remember. Look at these estimates going forward. Look at the numbers here. Is that awesome? Look at the base going across here. And again, earnings up 160%, sales up 284%, accumulation distribution B. All right. Oh, timeliness A. There we go. And note the base. And it pushes through here. 229% gain. The ticker symbol on this was LHSPF. I still remember it. Yep. 229%. They all don't know this, but it sure is nice when they do. We'll just continue onwards. Lone Star Steakhouse. Note the numbers. Note the estimates. Note the EPS rating, but note the timeliness, okay? And I guarantee it, this stock had a composite rating of 90 or higher when it went, all right? I'll share this with you. Research from Bill O'Neill and Company points out the vast majority of stocks have a composite rating, the big ones, the super ones, composite rating of 95 or higher. I'll pull it down to 90. I can live with that. And these other constraints. Now, I'm going to nuts and bolts something for you. You can say, okay, Patrick, and this is to help you, all right? So should I just make one master screen with all these constraints on it? No, have several screens. I talked about earnings up 30% or higher, or I didn't say and, I said, or sales up 30% or higher. Make a screen that 30% earnings screen with these other constraints on it, no low price stocks, all right? Composite rating of 90 or higher and accumulation distribution of A or B, all right? In the top 50 groups. Make another screen with all the constraints the same, except one. Instead of 30% earnings, take the 30% earnings out and have one that's 30% sales. Run both screens together, run them both, put them in one master list. This is big team, sorted by 1, industry group rank, 2, percent off high, and you got yourself a Mac Daddy list, okay? And I lived off of them, all right? I didn't have any clients. I didn't have any income. That was it, investing profits. But I was very stringent, and I need to share this with you. And this is really, really important. Probably the most important thing I'm going to say to you. Control risk. A clean and simple base breakout also gives a clean and simple base exit for a much smaller loss. Use that to your benefit, okay? Use that. Don't day trade. Don't look at 5-minute charts, 10-minute charts. Stay away from it. Buy stuff and let it work and work and work till it stops. It will really, here. I can't show you because we're on this screen right here. Let it work. Let it trend. If you get a chance, if we log out of here, maybe I could show you a couple of current charts so you could see. Or you can do this, team, on your computer right now. Just punch up the chart on Netflix. We bought Netflix at 422 to 423. Just look at the base. You can see it. When was it bought? November 2nd. There we go. So let's continue on here. Lucent, LU. Note that base there, team. Look at the numbers here. We like that. Going through these tops. All right. Earnings per share rate 94. But remember I said either great earnings or great sales? 30%. There it is. You can say, Pat, I might miss something. I don't care. Stack the deck. Again, use these numbers to your advantage. It will really help you a lot. A lot. Accumulation distribution, B. I mean, I will tell you, 30% earnings or average sales for the last 2 quarters, 30%. I didn't say and, or composite rating over 90, relative strength will say over 80 in the top 30 or 40 groups, top 50 groups. And again, an accumulation distribution of A or B, you're going to find winners. Oh, also, no low price stocks. Stay away from low price stocks. Cheap stocks are cheap for a reason. Go where the money's going. I really prefer, like I said, they make it easier for you. Just say over $12 a share, $10 or $12 a share, trades more than 200,000 shares a day. That's where money's going to go, all right? And you can say, yeah, but I have one that's $4 a share that went up. Okay, there's always an exception to the rule, but why not stack the deck in your favor as best as possible? That's what we do, and that's what we're doing at Mission Winners. Always love MRVC. Look at that simple base right there. Isn't that nice? Earnings per share 99. But again, if you focus on that composite rating, okay, timeliness of A, of 90 or higher, and a good relative strength rating of 80 or 85 or higher, and accumulation distribution of A or B, and in leading groups, you will find winners. You will. And key on clean. Look at the base right here. Look at that base. You could draw that with a crayon, lifting through 15. And look at the move. Look at the volume. And that's the other point I can't stress enough. People talk with their mouths and vote with their pocketbooks. Focus on stocks, all right, where volume's coming into it. They're voting. Go where people are voting. If you buy a stock and there's no volume coming into it all, you know what does that tell you? You're the only person that sees it. Nobody else is doing it. Be careful with that. Don't have an ego. Simply get in line with price and volume. We're going to continue on here if we can. Marvell. Look at the simple base right there and look at the volume coming into it. How are those numbers? Oh, I guess those are pretty good. Yeah. Good group. Earnings per share rate 95. Timeliness A. And again, these older charts don't have a composite rating on it, but I will tell you this, folks. That composite rating is golden. Now, I need to back off here a minute and share something with you. I was an IBD meetup co-leader for 12 years. I taught this on the stage every month for 12 years, all right? But do I work for MarketSmith or IBD, our Investors Daily? No, I don't. I don't get anything from them. I have a subscription to MarketSmith, and I pay the same retail price as everybody. I get no discounts. I get nothing special from them. I want you to know that. I'm just being upright and moral here. I don't want you to think like, the reason he's talking about this is he gets something from them. No, I'm just a regular person like you. I get no finder's fees. I get nothing. I just pay the regular price every month or annual, whatever we pay. I don't know. And we run our screens that I'll put up against any other screens out there. I had to get this right, folks. And I run them, and now I'm going to nuts and bolts it for you. I've mentioned industry group strength a couple of times. This is what I look for. I run all my screens, and you might want to take notes on this. No low price stocks, by the way, either. I run all my screens, and I sort them, number one, industry group rank. So all the stocks are together in the same industry group. Number two, percent off high. Number one, industry group rank. 2% off high. Why do we do that? When we're scanning through the charts, we can if we're looking at software, maybe software's a leading group, and you're starting to go, oh, this one's going up. Oh, look, this one's going up. Oh, look, this one's going up. God, maybe I ought to look at a couple of these things, right? You're connecting the dots. Systematize. It will really help you. I mean, you can see this, this ANET was a rocket move right there. I'd say maybe there was other things in that group that would need to move. If you've got your industry group screen sorted that way, you can scan the charts and say, oh, God, look, there's ANET. Oh, here's another one in that group that looks like it's getting ready to go. Oh, look, here's another one in that group that's looking ready to go. Birds of a feather flock together. This works. This works. Use it. Use it. And again, you know my story. I had to get it right. All right? Basing here. Continue onwards. Micron technology. Look at that base. Look at this. We owned this. We owned a lot of these. Okay? Earnings per share in 99. They don't have the composite rating because it wasn't developed yet at this point in time, but I'm going to say it again. You say you might miss something? I don't care. I can live with a composite rating of 90 or higher. An accumulation distribution of A or B, top 40 or 50 groups, no low price stocks, Price within 20% of 52-week highs. I'm telling you what, on accumulation distribution of A or B, money goes there. Look for the clean and simple base, and when it pushes through, look for that volume surge. People talk with their mouths and vote with their pocketbooks. Go where they're voting. Here's Microsoft. Look at the base. Look at the number. Please. It sounds like a bark on orders. It's just, I got to be honest, I find this exciting. This is fun. You know what's neat about it, folks? You can say, oh, it's financially rewarding. Yes, but it's also mentally stimulating on what we're looking for. And I just really like that. I think that's a neat, just a good thing to do. So just for what it's worth, I'll share that. Just the reason we do this is to help other people. I was up at the track jogging. It's probably been 10 years ago. And I got into a philosophical conversation with somebody up there, a man who was a little younger than me. And we were talking about helping people. And he said, can I share a quote with you? And I said, sure. Because he knew I was a scout leader for years and tried to help kids. But he said, this is a great quote. Be the person you needed when you were a child. Be the person you needed when you were a child. I think that's a great mindset that we can do just to help other people. And I'm not saying you're a child. I don't mean it that way, okay? But just the idea of we're here to help other people. If we can't do that, then what's the use of being here? Make things better, okay? That's the thing I'm pretty big on. Here we go. Mind string. Look at the numbers, please. The base, and it pushes through. Note the volume pickup here. Accumulation distribution A. And I guarantee this stock had a composite rating of 90 or higher when it went. Okay? I remember that. I remember all these, to tell you the truth. PeopleSoft, I remember this one. Yeah, I bet on one does too. Pushing through these tops right here. Note the numbers. Note the other stocks in the group. Note the estimates. Earnings per share rate 99. Relative strength 94. I guarantee this stock had a composite rating. If they had it back then, it would have been 90 or higher. There it is. And look at the volume coming through the tops. 40 great stock market winners. These are stocks Bill O'Neill talked about and put in this booklet. Okay? Prime Computer. Good base. Good numbers. Clean and simple base. Lifting off here. Relative strength 94, leading into new high ground. Good estimates. There you go. There it is. We're going to wrap this up here real quick. We've got a few more to go. Providian Financial. Now, this one is interesting. This is looser. This is a more loose, whatever, whipping around here, okay? Be careful with that. I'm not saying it didn't make a good move. It did, but it is loose. But note this, V, and then it rallies right back up on good volume, and relative strength 97. See that clean base right there? See the accumulation coming into it? Going across these tops. But at that time, it had an accumulation distribution of D. Why? Because of that selling. Be cautious. You have to be more cautious with that. So you can say, okay, Pat, so tell me, let's suppose you would do this. How would you do this? Come on, be real world with me. Nuts and bolts it. Because it has an accumulation distribution of D, and you can see it was a V-shaped base, and it's a shorter base right here. If you buy it, buy less shares. Good investing is not one size fits all, and that will help you a lot. We're almost done here. I'm sorry if I talk too long, but RFMD, I remember this going across these tops. Look at those numbers, folks. Is that sweet? Lifting across there. Timeliness A, you can see right across here, going across these tops. 78% gain in 6 months. There you go. And again, look at the numbers. And relative strength, 97. I guarantee this stock had a composite rating of 95 or higher. I can guarantee it. They didn't have it back then, but if they did, that's what it would have been. Up-down volume of 2.7. Continue on. Rollins Environmental. Look at that long cup and a handle pushing through there. Look at those numbers. Big cup and a handle, lifting through here, relative strength 90, near highs, pushes through. Look at the volume pickup on that bar. See that volume right there? 1,000% gain in 36 months. I have to pause here. I just need to share. Please don't think they all do this, okay? I'm not going to say that, oh, every stock goes up 1,000%. No, you get what you can. You ride trends for as long as possible. Let them work. Sell some into strength to guarantee profits, but also A, lessen risk, right? Lessen risk. And B, lessen stress. You've guaranteed yourself a profit. Less stress equal clearer thinking. Biggest part of this game, folks, and I said this at the IBD meetups for 12 years, the biggest part of this game is not what's before our eyes, it's what's between our ears. Mental capital. Do things, utilize tactics that will help you in that respect, okay? Do a couple more here. Safe way across these tops right here. Taken off. That's what we like to see. Earnings per share 90. Now this one at a timeliness of C. Makes it a little tougher. And accumulation distribution of D. You can say, gosh, maybe not do this one. Okay. Oh, so put it one up 300%. Stack the deck in your favor as best as possible. That will really help you. Can't stress it enough. Charles Schwab going across here, kind of V-shaped, but you can see these tops right here. Okay, lifting off, earnings per share 91, timeliness A. Okay, 400% gain in 6 months. Things that we look for over and over, and you can see the clean tops and look at the volume coming into it. We love that. I remember STRE going across these tops right there. We owned this, and that was a nice move. Timeliness A. Leading group, leading stocks, good estimates, good numbers, good volume pushing through the pivot, relative strength leading into new high ground. There you go. Over and over. Focus on that, and it will really help you. We'll click on one more, and we'll stop. 10 core across these tops. TNCR, still remember this one? Note the numbers. Note the estimates, note the timeliness, note the clean and simple base, note the volume coming through here, note the relative strength leading to the new high ground. Note, again, the up-down volume ratio. Things that you look for. Stack the deck in your favor. Strive to take certain constraints. It will really change your life. And I will tell you this, team, I'm going to say it again. I won't buy a stock with a composite rating less than 90. And you can say, oh, you might miss something. Why not stack the deck in your favor? The best ones have it at 90 or higher. Stick with that. Use these other constraints that I've shared with you. It will really help you. Don't think I've got to catch everything in the world. No. Stack the deck, as I said. The analogy, again, two people fishing in different fishing holes, and every 10 minutes one catches a fish, and every 30 minutes the other one does in the other fishing hole. Where are you going? These constraints help us, and it sounds corny, but I'm going to say it, helps us find fish. Now, I'm going to flip the coin here. I just showed you a bunch of examples, and oh, how great they work and everything. I need to share this with you. Does it work every time? No, and I'm not being negative, I'm not being a downer, but I'm being realistic. Nothing works every time. I said this earlier. If it worked every time, Bill O'Neill wouldn't have had to have a rule about limiting losses, would he? Or a tactic of limiting losses. There you go. So we limit losses, and this is why I love clean and simple basis. Price is good above the line and bad below. If it rallies up and then it starts falling below that line and volume's coming into it, sell some. Sell 20%. Control risk. Keep losses small. That's good for you financially. It's also good for you mentally. Never argue with price. Please, never. Like I said, I ran money through the crash of 87, and we didn't argue with price. We were out before the crashes. As I said, I'm not bragging, but Martin Zweig really guided me, and also price and volume. And I had sell stops, and I would continually getting stopped out of stocks that were, we had gains and they're starting to drop. They sell them. So, by the way, I also need to share this. I'm not saying we're going to have a crash, okay? Nothing like that. But we have to be realistic. We always have to have a plan. Plans to buy, plans to sell. And it works. It works really well to help us. Got an alarm alert going off here. Tesla. There's a downward sloping trend line on Tesla. Just for what it's worth, volume's okay. It needs to push through there on volume. That was what you're hearing there, team, is I have a limit alert set on all the stocks. And it just kind of helps. So, Owen, that pretty much wraps it up on the things that we wanted to address. Again, summarize. High composite rating. Let's quantify. Composite rating 90 or higher. Accumulation distribution A or B. All right? High relative strength. I'd prefer 85 or higher. Leading groups. Okay? Top 30 or 40 groups. Focus on those. No low price stocks. Over $12 a share. They trade more than 200,000 shares a day. They have an accumulation distribution of A or B. They have a simple chart pattern, kind of like this one you're looking at right here, that everybody can see. It's simple. It's vanilla. Look at the base here. This is the next one. 3 count. Look at the base. It's just going sideways. It's lifting off. Volume's coming into it. There you go. What's the next one? Let's see. Yeah, simple base here, going across here. Big cup and a handle going across that line right there. Look at the volume. There you go. That will dramatically help you a lot. Now, why do I like clean and simple bases? I'm coming back to this. We got to control risk. Price is good above the line and bad below. Do not ever get in this mindset. Well, it's in a leading stock and it's in a leading group and it's got great numbers and it's got a high composite rating. It's breaking out. Well, it's falling back into the base and volume's coming into it, but it meets the constraints. I'm staying with it. No, never argue with price. Price is good above the line and bad below. Keep losses small. And please avoid, I haven't looked at a 5-minute chart this year. I don't look at 5-minute charts. I rarely look at 10-minute charts, okay? When a stock is breaking out, this is really important, folks. When a stock is breaking out of a clean and simple base and it meets all of our constraints, okay? We're stringent here. Look for that volume surge. Look for price coming, people buying it. We don't want to be the lone wolf. Volume tells us other people see what we see and they are acting on it. We need that. No volume, be cautious. Be cautious. That will help you a lot. Let's see, I got Amazon here. Hold on. Amazon's working. Okay, just kind of watching it. No volume on it. So anyway, that team, in summation, that's what I have. I hope this helps you. I can't stress enough, one of the best investing. Here's another one that's working. I'll just rattle through the rest of these real quick. This was a V-shaped one. That's aggressive. Be careful with that. Guide to using daily graphs. All the different things on this. Team, I'm going to summarize it again for your sake. Focus on stocks in the top 40 or 50 groups. Focus on stocks with a high composite rating. Focus on stocks with have either great earnings and or great sales, 30% or higher. An accumulation distribution of A or B. Relative strength, 80 or higher, 85 or higher. No low price stocks, as I said. They're breaking through a clean and simple base that everybody sees, and it's doing it with volume. Volume. Look for those. Those are buys. Another important rule, and this is CANSOM level 3 and 4. We never buy a full position at one time. Your goal is to get, let's quantify it. Your goal is to get to 100 shares. The stock's breaking out. Buy 50 shares. The stock continues going up on a pickup in volume. Buy 30 more shares. And this can all happen in a day. The stock continues going up on good volume and the market's acting okay. Buy another 20 shares. 50 shares to start. It goes up. 30 more shares. Continues going up, 20 more shares. 50, 30, 20 shares for a total of 100. Transpose that mindset, that tactic, to the number of shares that you normally do. And remember this, buy when the market's acting okay. Don't impose your will on it. Ride trends, sell some in a strength, keep losses very small. Price is good above the line and bad below, which will help you keep losses much smaller. I know I shared a lot with you. I tried to talk fast enough to cover the material, but slow enough that you were able to take notes and grasp it. The Mission Winners, this is what we do. This is what I teach with videos every day, and make a key list every day with a list of stocks. It's not a huge list, with specific buy points on where to buy it and what to look for. Just giving them guidance to make better investing decisions and more money. And that's what we're after. And do it in a way that we're controlling risk. So that's what we've got. Owen and I were enriched. We were really excited about this. This is hard and fast stuff. This really, really works. And I pointed out, all these stocks I showed you, I think all of them have a timeliness of A. All right? All of them have strong accumulation distribution rating. Hey, use that to your benefit. Focus on stocks again. Leading stocks and leading groups with great earnings and or great sales and a high composite rating and accumulation distribution of A or B. I'm saying it again, and I know I am, but honest to God, it's something I wish somebody would have said to me a long time ago, decades ago. Hey, this is going to help you. Do this. So I share it with you, everything. And I need to share this from a moral perspective. I don't hide it. I don't hold back. It's like, oh, he's got other secrets. He's not telling us everything. No, I wouldn't do that. That would be morally wrong. I don't do that. I'm not saying I know everything, but if it's something that's relevant, by gum, I'm going to share it with you to help you. So I thank you all very much. I hope you have a good year end in all respects. And the last thing I need to say, please take care of yourselves. All right? Take care of yourselves mentally, emotionally, physically. One of the best things you can do is get up at the end of the day and exercise. Don't let this eat you up alive. All right? What you have has to last you a lifetime, yours. So take care of yourselves too. That's important. If you're not in good shape in all respects, this job is much harder. So anyway, I just wanted to share that too. And I think it's relevant to our conversation. Because you know why I say it? Because you're relevant to the conversation. Because this isn't about me. This is about you. And we want to help. So anyway, we hope it does. And I thank you. Owen, anything else good, buddy?
No, I believe that's a wrap.
Man, the last time I talked this long, I was trying to talk myself out of a ticket. Oh, can I tell a story real quick, Owen?
Sure.
Okay, this is great. Years ago, we were coming back from Colorado, and our house had gotten broken into, and one of the things they stole was the color TV, okay? Which kind of ticks me off because the neighbors across the street watched us getting robbed. And that was a mess to say the least. So it's a Saturday night, so we got let's get a new TV. So we drive down to Best Buy to buy a new TV. It's like 5 to 9. The store's about to close. I want to buy a TV. So what do? I run a red light. Nobody was coming. I run a red light, pull an illegal U-turn, and pull into the Best Buy parking lot with flashing red lights behind me. And it's naturally, it's the police car. And he said, I get out of the car. He says, are you aware what you did? I said, yes, sir. I ran a red light. They got a TV on sale. The store closes in a couple of minutes. I'm trying to buy the TV. And I said, can I tell you what happened? And I explained really quick. We'd been robbed. The TV, we were stolen. They broke into our house and all this stuff. And I said, can't make this up. You can go check the police report. And seriously. And he looks at me and goes, you really serious about this? Yeah. And he says, go ahead and buy your TV. He goes, but don't speed. And I said, you've been so nice to me. I'll tell you what, why don't you come on over? We'll watch a movie. And he goes, get out of here. Anyway, there's a story, a cute story. Folks, have fun too. Work hard, work smart, take care of yourselves, but have fun too. Enjoy the ride. So thank you all. Owen and Rich, I thank you too, guys, for putting this together. I really appreciate you.
You bet. Thanks, Pat.
Take care, buddy.